Well, same thing is true here. And I think that's, part of the misdirection, if you will, employed by these countries who understand that for a long time the West has been suppressing, in particular, gold and silver because it represents the canary in the mine shaft in terms of portraying a strong bond market and a strong dollar and a strong Western system, using that against us now by, not allowing the price of gold and silver to accentuate itself, not allowing the real price to be known by piling onto the short position and using that against us and standing for delivery. And that's really how they win. They play the Western game, which really is trying desperately to cling to the last vestiges of this system, this Keynesian system, and they have never let gold and silver run as a result of it, or at least even find its true price discovery.
Did you know that the top central banks are sitting on trillions of dollars in short positions in precious metals? Andy Schectman reveals a shocking reality. These banks have rehypothecated silver contracts by a staggering 1,600%. This means for every ounce of silver, there are 16 claims. Recently, 75,560 kilobars of gold were shipped to Brinks, Hong Kong, signaling a shift where entities are starting to demand physical delivery. If central banks can't meet these demands, the entire system could collapse, leading to a catastrophic implosion of the US economy. Imagine the chaos if interest rates skyrocketed to 30% and inflation soared, forcing a complete reset of the financial system. This could compel everyone to adopt central bank digital currencies, wiping out debt but resetting everyone's financial status to zero. The implications are terrifying. If central banks fail to deliver on these massive short positions, the ripple effects could devastate global markets and economies.
The West, at some point, I think, would have to acquiesce, and they would have to acquiesce to what is a very, very large and growing chorus of countries expressing, discontent. It's interesting when you look at the Project M Bridge, it has the capacity to mesh with the CIPS, cross-interbank payment system of the Chinese, the Russian payment system, and even SWIFT. It is using the ISO 2022, I think it is. I'm not the techie guy, but it's what all the stuff runs on, and it could integrate with SWIFT. And so I think what maybe they're saying is, you're forcing your enemy to realize that the dollar is on its way out. Gold will be the de facto settlement currency, and this would play in, I think, very hand in glove with what Rickards has been saying for a very long time, that as the value of gold goes higher, the BRIC settlement currency goes higher as they continue to print more dollars, and the dollar loses value against gold. It only strengthens the BRIC settlement currency. When you see Kristalina Georgieva, the head of the IMF, say that a central bank digital currency not pegged to something would be fiat, maybe it just simply means that they get so far ahead of this new system that entices the majority of the world and of these 59 nations on top of the 10 that want to join, that the West has no choice to join in on the party. And maybe it only strengthens the BRICS platform, and actually something that they actually acquiesce and join themselves at some point. I don't know. I mean, maybe I'm just grasping for straws. That's about as tough of a question as I've been asked right there. And I'm okay. So yeah, that makes sense. I've been saying that for a while too, that I don't know if it's lured in by debt forgiveness, or they just allow the whole system to blow up. And that's what they say. Look, everything will reset and you'll start over, take the new CBDC. Mm-hmm. And I've been saying that in one way or another for a long time, because the people who you and I talk to every day would have no interest in taking a central bank digital currency. Now, granted, we represent a minority, but I think most people, given the option, wouldn't take the CBDC. So the question is, do you create an event where, let's just pretend interest rates went to 30% and blew everything up as inflation goes to 30% and interest rates rise to compensate 25% interest rates or whatever that number is, and the whole system resets. Yeah, I mean, there's your golden bridge. You have no choice. Sign on the dotted line, take the CBDC, which Lael Brainerd has worked on with MIT and developed it. That, based upon Biden's fast tracking it with an executive order. How do they get people to take the central bank digital currency? I'm not sure. Either there's an event, or again, yeah, some sort of luring. But Nasara Jassara telling people that their debt will be forgiven. Remember that someone's debt is someone's asset. So I don't know how that plays out unless the whole system blows up at once, and leveling the playing field and making everyone down to the same common denominator. And when you realize the majority of the debt's owed to the American public through Medicare, Medicaid, Social Security, government, military pensions, and look at who's been buying all of the bonds as the rest of the world sells it. The hedge funds, the mutual funds, the money markets, the banks, everyone chasing yield. And so we own the majority of the bonds that everyone's been selling. So if they were to reset the system, they're resetting it on us primarily. So there is your golden bridge. Yeah, start over. You're out of debt. Everyone starts from scratch, and we make you whole with the CBDC. I could see something like that. Mm-hmm. Certainly, it would not be straightforward. They would definitely employ some form of deceit or misdirection to get people to accept what would be something that most people wouldn't want to take, given their choice. Preparing, even though the times wouldn't say that you should. Reluctantly preparing, as you would say. And I think that's the problem that most people face in investing, is that they are too reactionary. Even the markets are too reactionary. And the people like us who are called tinfoil hat wearing preppers are mocked until the realization that we have been right. So I think it's like anything. You prepare when times are good. It's just like, the squirrel who spends all summer gathering nuts, acorns, so that he has it for the winter. Well, same thing is true here. And I think that's, part of the misdirection, if you will, employed by these countries who understand that for a long time the West has been suppressing, in particular, gold and silver, because it represents the canary in the mine shaft in terms of portraying a strong bond market and a strong dollar and a strong Western system, using that against us now by, not allowing the price of gold and silver to accentuate itself, not allowing the real price to be known by piling onto the short position and using that against us and standing for delivery. And that's really how they win. They play the Western game, which really is trying desperately to cling to the last vestiges of this system, this Keynesian system, and they have never let gold and silver run as a result of it, or at least even find its true price discovery, because it represents the kryptonite to the system. So you suppress the price of gold on the LBMA and on COMEX with tremendous amount of leverage, and no one stood for delivery. But that's where it ends. And these countries have been accumulating at the manipulated Western price and standing for delivery to the point where the central banks, or the commercial banks rather, I think are trapped, or will be shortly, and are doing desperately whatever they can to get out of their shorts. So that would be a perfect form of misdirection, and using the price of gold and silver to your advantage when no one's buying it, no one's talking about it, the West is selling it, people in the East aren't, and they're using that to their advantage. At the same time, they're using that low price as a subsidy, not only to accumulate, but to possess it and pull it off of the exchanges. It's actually very smart. When you sell something short, that means someone takes the other end of it, the long, and that long may want to stand for delivery. Mm-hmm. And that's the issue. You have the ability to stand for delivery. No one ever did, but now they are. And that's like, when I mentioned the other day, a few Fridays ago, where 7,560 kilobars of gold were shipped out to Brinks, Hong Kong. And in 2015, the CME launched a contract that is physically deliverable in Hong Kong, and they're gold kilobars. And they're bought by the bullion banks in the West, and then, shipped out co-signed and shipped out to the Brinks Hong Kong off of COMEX. And So from there, I would argue those gold kilo bars are transported by armored car to the Shanghai Gold Exchange, where they are then sold for delivery, immediate delivery. So if someone takes a long contract, they have the right to stand for delivery. And just remember, whenever there is a short, there's someone else taking the long. And the long would typically be, normally, it would be the managed money. But now you have the sovereign wealth funds and, you know, on behalf of this, on behalf of their governments that are purchasing massive amounts of gold and silver and standing for delivery. And that's really the difference where it can become a problem. Sure, they could paper it over if there wasn't delivery requests, but the delivery requests alone are necessitating the finding of physical metal. And if you naked short, when you look at the LBMA, how the hell are they trading, you know, nearly 3 billion ounces of silver per day? They're not. It's paper. And when you look at the COMEX right now on silver, it's rehypothecated about 1,600%. So there are 16 people holding contracts. Only one would get fulfilled if they all stood for delivery. Now, no one's all standing for delivery at once, but maybe that changes. If there is a failure to deliver, then how fast do people say, gimme, 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 and then what happens? So much like everything that the BRICS have done in these countries, they're methodical. They are not shotgunning because it cuts off your nose to spite your face. Keep playing the game as long as you can. Suppress the paper price, stand for delivery, take possession. And that's what they've been doing for 3 years, and it's starting to accelerate right now, especially in silver. You can see the numbers on the Shanghai Exchange are down to their lowest levels in years. And, you know, when that's gone, then where do they get it? COMEX is down to, you know, peanuts and 60 million ounces in the registered category, and 300 million, if we believe the numbers that are true, that are not unencumbered, that are not encumbered in London, yet they're trading nearly 3 billion per day. They only have 300 million they have 800 million at the London Bullion Metals Association, but 500 million belong to the ETF. So you got 300 million backing 2.9 million per day, 2.9 billion trades per day, ounces. So you get these countries who hold these contracts saying, no, I don't want cash, I want delivery. There's a problem.